Hello, this is Kathy Min, and I'm in Chapter 2. I hope that Chapter 1 made sense to you and that you're progressing well through our course and all. I'd encourage you, if you have questions, please email me, and if we need to, we can talk on the phone, but please let me be of assistance to you, okay? All right, this is Chapter 2. I'm on page 68. And I wanted to visit with you about a few things in chapter 2 because this is such an important chapter. It's probably, to me, it's the most important chapter in the whole course because this is where you learn to write journal entries. This is how you learn to determine whether to write the journal entry for an account with a debit or a credit. So anyway, we'll get started with that. First off, an account on page 68 of your textbook, and an account is the detailed record of all increases and decreases that have occurred in an individual asset, liability, or equity during a specified period. So any increase or decrease in an account, this is what we're referring to. Now, if we go over to page 71, let's look at that. This is a chart of accounts. And this is like the table of contents of a book. This keeps track of all the different accounts that you have. A large company, you know, they could have several hundred accounts. This obviously is a small little portion of accounts right here, but this is our way of getting started. You'll notice that we have 5 types of accounts, 5 classifications of accounts: assets, liability, equity, revenue, and expenses. Okay, 5 different types of accounts. Okay, I want to go over to the next page on page 72, and let's just talk about something, and it is called a T account. There's a formal way, a formal account, but in lots of instances, accountants will sit down and use T accounts to help them determine how should a journal entry be written and all. And so when we talk about a T account, literally right here, notice this is a T. The drawing there, cash in this instance is the account name, and on the left hand side is always going to be the debit, and on the right hand side is where we're going to show credits when we're showing journal entries being written. Okay, on the next page, on page 73, we have some rules that we need to know about. When we look at these rules, it tells us that we have, here's our classifications: assets, liability, equity, revenue, and expenses. Now, for each one of those, notice that they've got debit for assets. Notice it's the arrow up. That means when an asset is increasing, you're going to debit it. Cash is an asset. So if somebody pays you $1,000 for fees earned, then what's happening here is you're going to debit the asset because the debit cash would be the title of this T account because it's an asset, and you would debit that because you have increased your bank account. Fees earned is a revenue account, and notice that for the revenue, when it increases, it's a credit. So when we write the journal entry, we would debit the asset and we would credit the revenue account, and that's called using our normal balance. Notice right here, here's the definition of normal balance and all. This normal balance is the side in these classifications that increases. So the normal balance for a liability account would be credit. So if you have increased a liability, if you have gone out and have charged a purchase at Office Max, you bought some more supplies, that means that you have increased your liability. In the journal entry, you would credit that liability, and the office supplies are an asset. They're a resource that you own, and they would be debited because you increase those. Normal balance means the side that it increases on. So here, assets, its normal balance is a debit. Liability, its normal balance is a credit. Common stock, its normal balance is a credit. Dividends is a contra account for common stocks, and its normal balance is a debit. Revenue's normal balance is a credit. That's the side it's increasing on. And expenses, they increase as a debit. So that's their normal balance. Okay, let's look on page 74. This is what you want to use probably whenever you're writing journal entries and you're trying to determine, am I increasing or decreasing? And once you have decided how an account is classified, whether it's an asset, an expense, dividend, liability, revenue, or common stock, then you want to refer to this chart. And if it's increasing, then you're going to use whichever one of these. Like if it's an expense, you would debit when you're writing your journal entry. Let's look on page, let's see, we've got right here also. Here's a T account, and again they're using cash as the example, but notice that they're helping us determine the balance of the T account. And what you do is you take the total of your debits, which is the left side, which equaled $35,500, and in your mind you total up the credit side, which was $23,200. You take the difference between those two. In this instance, it's $12,300, and whichever side is the bigger side, that's the one that still has the balance. So in this instance, cash has a debit balance of $12,300. I'd like to also say in this chapter that the summary problem that is over on page 97 through 100, it's a very good example, illustration of writing journal entries and all, and so you might want to look at that. When you're writing journal entries, please be aware that the debit always is shown first. You will always have one debit and at least one credit, and the debits will always be listed first. Notice as you go through the chapter and you're looking at the different transactions and examples, the debit is always shown first. Again, if you have questions, please send me an email. I'll be glad to work with you. And if you need to, if you'd like to, I will be oh so happy to call you up on the phone and answer questions and work with you. You don't have to be alone in this. Bye-bye.